Alright, so hello everybody. This will be a video for all the new investors especially, and then I'll be running through really quite a lot today. There's a lot to learn for new investors and to understand, because whenever you first get into the market, your mind's kind of flying, and whenever you see stocks go up or down, if they go up, good, but if you're new and you see them go, like dip a little bit, people like get real worried. So investing for people that are brand new, you have to look more than one day. Unless you're doing day trading, there's different kinds of methods, but that's not what I put you guys in for the plays that I've suggested to y'all. It's not about doing a day trade, okay? At least unless it's DOGE. But yeah, so there's a lot to go over here, and I've taken time to write out all my thoughts and to write out what I think about each company that I'm in, and what I'm looking for next, and all this stuff, okay? So I really just want everyone to like soak in the information, right? Because there's really just a lot here. All right. Um, always whenever you're investing into a stock, always make a plan for the best scenario and the worst scenario, like anything in life. Okay. Especially for like the higher volatile plays like CTRM. Okay. I got in at 68 cents, and I really think that this company is bullish long term. However, I think that the stream of Reddit investors are going to pump and dump this stock. And I think that it still has a lot of room to run, being a very low market cap meaning that basically the lower market cap, the easier it is for prices to rise and fall. Okay, that's why it's a penny stock. I think there's a lot of potential to run in this company, but of course, if I was just getting into this company now, way too high risk to get in at the current market price. I do see that this stock is going to $3 to $5 with the stream of Reddit investors, and I will be selling. And if it goes to $10 after that, or, because I could be wrong, but if it goes to like $10 after that, whatever. Because at the end of the day, you're in the market to make a plan to secure your gains, secure your money. We'll get into that here in a bit. So, when getting into a company, you always want to secure your gains. So, I got into a cannabis company called APHAA, Feria, and I got in. Let me see if I can show you. I got in down here. So I got in at $11.90 with two buys, one $11.90, one at $12.50. Okay, and I sold at $24.50 after the market started dipping because Reddit investors have been everywhere. They've been all over my plays, helping me out, but also screwing me up. Because then I have to take that money out and find another play, and I wasn't expecting to do that so fast. So I am always scanning, but yeah. So my plan over the next 6 months was to get to this market price, and hey, we hit it already, so I'm out. And then it just kept falling. So I sold 40 shares, and then I sold my last 45 here. So it was a 2x on my money, but I couldn't risk the stock just to keep plummeting back down to where it was a month ago, before the stream of investors, or like to right around here, which would be about 12.50. So it hit 27. I sold this day, the 10th, whenever we started seeing that fall, and I'm very glad that I did. I had to sell to secure gains, and yep, very glad that I did. Now, when it comes to all these different plays to consider, some are short-term plays, and others are long-term plays. I don't enjoy doing the day trading, because where I work, I'm not allowed to be on my phone all the time. But even if I was able to, I wouldn't want to do that anyway. It's just too high stress. I enjoy seeing my plays rise over time. So, and I enjoy getting into like lower market cap companies, so you can still see the increases in your money very quickly. But I also have established a very good amount of my portfolio into my long-term investing stocks, which would be Walgreens Boots Alliance and Fuel Cell Energy. And I actually did take a portion of my money out of Fuel Cell just because of the rise that it received. So it ran up in stock price this past week, and I sold right somewhere in here. I sold, or maybe it was here. But yeah, just based on the run up it's received this past month, I wanted to get out some risk and see if I could sell out and see what happens with it. If it falls quite a bit, I'll just get right back in at a lower cost. So that's just kind of how it is, just making a plan. And also, guys, don't be chasing stocks. So whenever it was my first year of investing, that's how I lost the most money, was chasing stocks. I would just follow, what was up 60%, 30%, 20% that day and get in. A couple times, it works out. But sometimes whenever you get in and then it just starts plummeting and then you just sell out, it's the easiest way to lose money. So again, make a plan for best and worst case scenario and do not chase. So here's my overview of the market, just to go through some of the stuff that has been happening. All right, so since the huge market drop with the COVID-19, since that time that we bounced back up and things have started to open, the market is up huge. We've seen investors like I'm starting to see, like, now I'm having, a lot of friends and family invest, and it's just like, man, I didn't really expect that to happen. And then you also have a stream of Reddit investors fueling the web, so people on Twitter and Facebook are seeing these gains of people getting all this money in the stock market, and now that they're getting in. And a lot of them are actually getting burned because they don't understand what the hell they're doing. And I've talked about that in a couple of videos, and I know that Dennis and Hunter and I, we're the only, and I guess Sarn Barjorno, but he isn't really doing it every day like we are, and talking about it. So, but yeah, it was just Dennis, Hunter and I, and we've been learning, making progress in our investment experiences, and just recommending stocks to each other. I think Dennis actually recommended APHA. I was looking into it, but yeah, after he said some stuff, I looked deeper into it. So that's how you'll kind of learn from other investors. You'll be able to take a look at their financial investors page, investor relations, and make a decision for yourself on where you see the stock long term and where to look for to get all this information. But yeah, with the Reddit investors, then you're seeing these people get in, okay, that might be putting $1,000 in, whatever, and then they're doing what's called a pump and dump. So a lot of them are just following the trend, and they don't actually understand when to sell, or like how the market dips back down and all this other stuff. So they're not going to sell, they're just going to buy. Okay, but then whenever they start seeing that they're in the red, meaning they're down negative, then they're going to sell, which will send the stock market, or the stock price, continue to fall, and while the smart guys that got in are the ones that are making gains. So that's just the difference there. And that's again why I sold out of APHA, was because I did not want to be part of the people that could not secure gains and eventually just get burned. So if I would have stayed in, I'd be down another $400 or something like that from where I was up. But I still gained 100% on my investment. So I was up another $1,000 on that, which is, it was only 2 weeks for another $1,000. So I mean, that's good to me. Now and let me show you my account. Okay, I've been learning a lot, all that stuff. So I'm up $22,000 the past year, which is 364% of my portfolio. The past month, I'm up 15,000. So I made a lot of that my past month off of some of these quick plays that I was also following the stream of Reddit investors, but only because I knew that I could sell out and I could make a plan for myself, so I could probably be successful if I did it. But now you see that I've taken my money out of those, and now I'm just getting back to making a plan and finding a base. So that way, I have all this more money to invest, which means I have to be a lot more careful so that I don't lose it. Because let me show you what happened whenever I didn't know what I was doing in the market. I was following someone else, and I went up to $24,000, and then I went all the way back down to where I was when I started. So that's why now this time around I don't see that happening. Okay, but I mean, I didn't think it happened, but I am making a plan for myself, and I'm learning as I invest from my mistakes and from my successes. Now, again, since I have a large percent in my portfolio very fast, now I need to start giving it back to some of these long-term investing plays. So that's why you're kind of seeing me get into Walgreens Boots Alliance. Now, whenever you're investing into stocks, and this is for the new investors, please, please, please do not have the fear of missing out. Because it gets all of us, even me, I've been in for a couple of years, I get the fear of missing out a lot, especially if you just consistently watch the market. That's when it starts to hit you. And by the fear of missing out, people call it FOMO, fear of missing out. So basically it just means you're chasing stocks. So let me pull up, as an example, SNDL. Now, this stock could be very successful long term. It could not, but the stream of Wall Street investors, or not Wall Street, excuse me, Reddit investors, um, just basically blew this up. Like, look, it was at 60 cents. It went all the way up to $3.13. Now, imagine if you had got in, up around here and you were just chasing the stock, okay? So let's say you're like, oh man, it's just continuing to rise. Look at this stream, it's going to go up. Oops, oopsies. And then you're like, okay, well, I don't have any fundamental, like, I have no idea what I'm doing. I don't understand. I don't have a price target for this. I don't understand. Like, if you don't cost average in, then you're just cost averages this, and you have nothing to cost average down with. So you'd be down about, like 33%. But you probably would have sold out before you reached that mark. But so yeah, just don't chase the stock. That's the thing. Like, you got to think of it like every single time you're investing into a stock, you have to think of it as like a business. So basically, see that money in your hand, okay? Would you give that money to somebody that you knew nothing about, expecting them to give it back to you? Like, that's what I'm saying. Like, you have to understand who you're giving the money to, what they do to make money for their company, what you expect them to do as a company in the next year, 5 years, whatever. Even for these low market cap companies, you have to understand what exactly it is that they do and what exactly it is that they're trying to do. Whether they're a profitable company, where are they moving? Could they take their business to other continents, and like establish a very successful enterprise over there as well? So there's a lot to consider, and you got to play those hypotheticals to really understand what exactly is going on. And now the last thing that I wanted to talk about is, losses during the day, okay? So whenever there's losses happening during the day, like, yeah, comment about them, because it's kind of interesting. But, dude, it doesn't matter. Like, whatever. If you are long on a stock, by long, I mean, like, for me, long is like 6 months and over. For other people, long is like a year. But for me, long 6 months. And if I'm long on that, I don't care if it drops 5% that day. Like this is a stock right here, VYNE, that I am actually going to be putting probably another $1,000 in. I see this stock very long term, and I think that it's going to do extremely well. Now, could it drop to $1? Yeah, and I would lose most of my money, but whatever. Like, that's just the cost that it comes with, believing in a company. So yeah, just don't worry about the week. Unless you see a stock go down like, an insane amount, it's not really a worrisome where you have to consider selling out, okay? It's the stock's going to bounce back up, okay? It just takes time, but for new investors, they think it's like the end of times, like we're entering into a war zone, and like the stock's going to just get blown up or something. I don't know, but that was a bad analogy, but you all know what I'm trying to say. So yeah, don't worry about the losses during the day. Again, make a plan for the best and worst case scenario, understand the fundamentals of what the stock's going to do, and use some of these other methods to try to prep yourself for success, right? So for me, one is also looking at these price target analysts and seeing what they have to say, okay? So for that VYNE stock, it's at 265. This is based on the end of 2021, and I would be able to make about 33% if it does hit $3.50, meaning I would make an extra, if I put another $1,000 in, make another $1,000. So I would take my money from $3,000 to $4,000. So I'd make another $1,000. Now if it hits $7, now that's when we're starting to reach, a bigger portion of money that I would be flipping, and all that stuff. But if you're long on a stock, see, that's the cost that it takes, right? So for some of these penny stocks, like SNDL, the one I just showed you, Sundial Growers, they flip 300% in the week. Now, for some of these other stocks, to see like half of that, you want to be in for a while. It's safer, it's more secure, but also this compared to something like Amazon is not very safe and secure. So, but it does come with a much higher yield. So that's kind of how you look at it, and how you have to risk it out. Now, my advice is where to look are every single company, okay? Every company has their own investor relations page. It's literally on Google. All you have to search. Search the ticker symbol. By ticker symbol, I mean Zomedica, ZOM. Fuel Cell Energies, FCEL. So just search that and then search investor relations, and then it'll pull it up. And then you'll be able to take a look through, their earnings call. You'll be able to take a look through their, like, everything, right? Everything that they're doing, like what they're doing as a company, recent news of where they're moving. And even in the past years, how they've done previous to last year's earnings compared to this year's quarter earnings. So, like, there's everything that you can look at for that. And as you just are growing as an investor, that's stuff that you want to look at. For me, it's something I've been growing on as well. Like, you think whenever I was like whenever I had this, I was looking at investor relations pages or even knew what they were? Hell no. I was making money following someone blindly. Why would I even look at any of that stuff? Now that I'm investing on my own, I'm looking at that stuff and I'm making decisions for myself. So that's just the difference as you grow, is you start taking responsibility for your investments, and then you'll see them either rise or fall. Now, here's another thing you could look at. Just search tip ranks, and then they'll tell you what the what analyst ratings are. By analysts, they're just the guys on Wall Street or on other hedge funds, or just people that are financial managers, that kind of stuff, that do all the research for the company and come up with what they think the company is going to be at per share at the end of the year. Okay, so that's just kind of another thing to look at. And then you could also look at some of these other sites, like for VYNE, somebody has a low analyst rating of 83 cents, median $6, and the high is $9. And then Walgreens Boots Alliance. I've been looking at this, and I've been loving it. And I actually have here to go through with you guys my thoughts on each stock that I'm in, and kind of what I'm hoping to do with it. Okay, so for the first stock that I have written down here, I'm actually going to be talking about Zomedica. And I know I think Aaron, you're the only one that's in. No, Hunter's in this as well. Yeah, anyway, I put a couple of you guys in this, or I know Hunter and I were talking about it months ago. But so ZOM has a product they're releasing called TrueForma. Basically, that is like one of just in layman's terms, like it's just one of the great new advances for the animal medical services, the clinics and stuff like that, for them to use to diagnose animals. Now, when it comes to stock price, and we have to consider what the products are doing and when they're releasing. So, TrueForma is releasing March 30th. Okay, so that's about a month and a half away. They're releasing March 30th. And what's going to happen with that is, so whenever they release, the stock price might dip leading up to the release. It's growing now because they're getting closer to the release, but people will start to take profits, especially on a company that's ran up 142% the past month. But I do think that this will continue rising, okay? I believe it'll consolidate around 2.5, and I expect it to be at $3.50 minimum. That's conservative. This time next month, minimum. I do foresee that it could be anywhere from, I want to say, $6 to $7. Some people think it's going to go to $10. I'm just trying to play it safe. So the highest that I could see it probably going would be $6. And if it hits $6, like I told you, Aaron, I'm going to be swimming, man. Like, if it hits $6, I put $3K or something in. If it hits $6, this will have made me, well, $18,000 in 2 months. Yeah, like, I'm gonna be needing that money to pay off some of my fiance's loans. So, man, if it hits that, I don't know, man. But I do think that it has potential to hit that, especially with the run-up, especially with the hype now in healthcare services, and just if this company can capture like 10% of the market, eventually, if they keep coming out with new products, they could be $20 to $40 share price. But I'm just trying to play it safe, make a plan and see what happens, right? So at the end of the day, we're just trying to make money. If you miss out, hey, man, like I said, you made the decision, and you had a plan for yourself. So, follow that plan through. Once you start going off that plan, that's when you can start getting burned. So yeah, I will probably sell about 50% of my portfolio mid-March. And I want to say that just to see what happens. So if the stock price starts falling insanely, and you know, because whenever a product releases, right, people are buying the news and they'll sell the release. So they'll buy you know, they'll buy that, they'll just continue to build up the stock price. Then they're going to take their profits because it's like, so you're not getting anything else than what you were expecting. So people are going to sell it. That's why you saw with the last stimulus bill, the market didn't go crazy because they were already expecting another stimulus bill. So that's just my 2 cents on that. Now for fuel cell energy, it's in the you know, to reducing like carbon emissions and stuff like that, especially with the world going green. That's why I put my money into it. It's also like a hype play, that and Plug Power. But fuel cell has been catching up to where Plug was, and if fuel cell can get a deal with one of these companies, they're going to fly. I did sell about 100 shares of my portfolio in fuel cell energy, so about $2,000, something like that. I had to sell that just because it was the run up going on, and I didn't want to, you know, get burned. So, and secure gains as you go. So I was up 50%, secured some gains, and have that back in my account right now. So I am holding for quite a while, and I am hoping that Wall Street Bets continues to like push this if they do at all. I don't even know if they're in this, but it's been running up quite a bit, so maybe. Just in the past month, I'm not talking about before that, but yeah, the past month. So I did, like I said, sold 100 shares. If it drops about 10%, I will probably get back in with everything I sold out of. And basically what that does, say you sell at $26 a share and it falls to $25 a share, hey, you know, you got in $1 a share cheaper, which means that you saved money and got in, you know, at a smaller amount. So that's a good thing. You shouldn't be trying to do that all the time because you can also get burned on the other side if it keeps rising. But yeah, that's just something to consider. But yeah, I do not feel bad securing gains, even though the price ran higher right now than what I sold at. I just happy to secure gains, get that, you know, 50%. Now this is probably my longest term play that I am very interested in is Walgreens Boots Alliance. So they have a thing going on right now for selling wholesale their entire everything that they have for that for $6.5 billion, which means that they would have $7 billion in cash because the other $500 million would come from selling some of their stock shares to the people that they're having to deal with. So they'll have $7 billion cash on the balance sheet. They'll invest more in all their services. They'll load cash. They'll have a loaded cash balance sheet. They'll have a low forward PE ratio, which they already do. And they're one of in my opinion, the most misvalued stocks. I think that Walgreens is an easy $100 share. But that's the difference between getting into some of these shares that I think at 3x in the next year compared to I think Walgreens will 2x in the next 12 to 24 months. And like I said, that's the difference between getting into some of these penny stocks compared to the long-term investing stocks. Especially if you have like a couple $1 million in the market, your best bet is some of these long-term growth stocks rather than, you know, seeing your account go up and down $100,000. And if you were to get burned, say you put a lot of money into a bunch and then you start seeing the market drop insanely, you'll see a 20% drop in your account if you were holding Walgreens compared to if you were holding a penny stock that just lost 90% of its value. So, yep. So I think Walgreens is a great company, and especially, you know, they're rolling out all these COVID vaccines, and people are going to go into their stores, buy stuff while they're in the store, you know, hopefully have a good experience, start coming back more and more. They might start going there for the prescriptions because of that experience, you know, because Walgreens is it's like a convenience store in the town. So, and especially if they're going to, you know, continue doing all their services and stuff, the company's going to start making more and more money. I just think it's an all-around good thing for Walgreens. Another thing that I'm in is ACRX, and I know that I put a couple of you guys in it. I told my brother it's the best bet for going all in if he just wants to do one stock and let it sit. So my forecast for the end of 2021 is $5 to $9 a share, and I think it's a minimum 2x. So I got in at 225. I think it's the very minimum. You know, it'll be at $4.50. But I do foresee it going much higher than that. I did put in almost $4,000. Sorry. And so If it does continue to drop, which I don't think that it will, I think it actually has a strong base right around here. And that's something I'm very happy about. So let me look at the 3 months again. Yeah, so see what it's just kind of in that trailing phase. And it's not going crazy. It's not up or down. 10%, 5% is fine, especially for these stocks. It's not a big deal, especially on a red market day. I do foresee it being $5 to $9 a share at the end of 2021. And people that are new investing as well, they're always like, "Oh man, we can't. Oh man, a year." I mean, like they just want to get fast money quick. Quick. Do not do options trading. Do not do options trading. It's not worth it. It is not worth unless you are some genie. Do not do options trading. Don't. I'm not. I don't like options. I think that it's the most risky thing you can do. Again, people have turned $100,000 into $200,000 in like a week doing options trading. But again, most of the time you lose all your money, and by most of the time I mean like 90%. So I'd just be very careful. ACRX is basically they have a product that helps relieve pain orally much faster than many other products, and also has a much longer half-life so that it can stay suppressed compared to morphine, which has a half-life of 30 minutes. This product that they have released, let me see if I can find it. No, I didn't write down what the half-life was, but here, let me go to ACRX Investor Relations. Other stuff that's going on for the company is, so this product does help manage pain, and it also has less side effects. So it has far less side effects than the others. And this company also has 3 other products, but three out of 4 of them have been approved. 2 in the U.S., 1 in Europe. 5 out of 8 brokerages rated buy rating on this. 2 out of 8 recommended a hold rating, which is neutral, and 1 out of 8 recommended a sell rating. So this is, I think it has far more upside when it comes to the long term, and I think it is a great buy. Now, moving on to Jagex. I haven't really talked about this too much in my chat. But, obviously they have upcoming announcements. They're doing preclinical trials for some of their products. I do foresee that this is so, it went up to $4 a share. And now it's down to 283, and it's just kind of having a slow burn down. Now, all that they need some news, and bam, right back in. People are just having a slow sell-off. It is what it is. It has seen some consolidation these past 2 weeks right around where I bought it in, which is why I bought in at that price. And as you get more experience, you'll see, what to look for buy-ins rather than just flipping up on your phone. So, yeah. And like I said, they're doing phase 3 trial for cancer patients, and yeah, so if they can come out with some good news, you will see the stock skyrocket. But again, my best bets are definitely ACRX and VYNE, just based on the run-ups to some of these other stocks. Now, if you want to do long-term investing, Walgreens Boots Alliance is my best bet right now on that, because I really only have that one for super long-term. FuelCell would be a second runner-up. But for VYNE, I think that they're going to do great. So basically, they have 2 products that help with acne. One is AMZEEQ, and the other one is FODIOS, foam, and that's in a phase 2 clinical trial. The AMZEEQ was approved, and basically they just released something, I think this past week, that said AMZEEQ or the photos. Anyway, I'm forgetting which one. But one of them, the skin doesn't produce the as much resistance to what they're trying to the product as they would have expected, which means that it's a very good thing for the company. I got in at 261 about a week ago, so it did go up and back down. I got in, yeah. So, but I am going to be looking to buy some more. I'm just trying to feel out the market, see what happens. So yeah. I think that's actually a bit, but there's a lot more to talk about as we go through, but I am very excited for all you new people getting into the market. I think it's going to be one of the best things you've ever done, and as you learn and you grow in it, It's you make much more money than you do and in doing a an index fund or anything like that, unless you're in the index fund with every single stock that does extremely well. But I don't know if there's one like that. So yeah, I really appreciate everyone watching. Again, this is just the last little bit here. So this is a stock chart. And you can start doing this to try to find out when to average in if it does follow the trends of the market. So you have a resistance level here, you have a resistance level here, kind of there, and you're starting to see resistance up here. Nope. So yeah, for ZOM, I mean, and also another thing that people look at a lot is the RSI. It's an indicator which basically tells you if the stock is overbought or oversold. Under 3.0 is undersold, over 7.0 is overbought, and this is a very long time to stay overbought. So I do foresee this continuing to happen, though. I do foresee ZOM to continue doing well. They might go back to, like, look at it. It's crazy. It's hit like. Just like it's honestly awesome. You have this right here, you have this here, so like the trend basically just stays overbought for like freaking forever, which is kind of awesome to see. It's starting to come down now, but as we saw here, there was a dip and that came right back up. So yeah, I have a lot of faith into ZOM, and I think that's going to be the one that makes me the most money over the next month. Because if we look at my equity, this is my equity in each stock. This is my buying power. And yeah, so hey, thanks for watching, everybody. Again, make a plan, do the best that you can. Hopefully that overview of the market kind of helped out. Now people are also worried about a market bubble. So basically with everyone getting in and stocks flying sky high past what they're expected to be, even for like fuel cell, people are expecting not expecting, but they're speculating a market crash. I don't think that'll happen, at least not until 2022, but I guess we'll have to see. All right, guys, thanks a lot.